Hello again, it's May 4th, and I'm just going to show you what the market looked like today. Starting off, it was in a pretty good uptrend all day long. It gained about 100 points, and initially overnight it was in a bit of a downtrend, but as often happens when the U.S. market opens, it tends to move in the opposite direction. It's just kind of contrary that way. And we can see right here about 6:30 it opens up, starts moving upward. I usually don't like to take those initial trades because there's really not a good sense of direction of where it's going yet until it starts forming the first fractal patterns. So really, I don't have a good handle on this market until about 5 minutes in, and then I could see that it's starting to trend, and it takes the breakout of this high right here. I'm in a uptrend. You see the market's fanning out and moving upward, so that's when I went long right here. I'll use a green mark for going long as the 8 EMA is fanning out from the 14 simple moving average. It's moving upward, and so that's my first trade, and I'm using a trailing stop loss method, so I don't have a target set. This is the kind of day where you'd want to use a trailing stop loss, and initially you're not going to know what type of market it is, but in a trending type market, the trailing stop loss is going to be the best strategy. So I can either get out when it hits the upper Bollinger Band, or I could stay with the trade, or let the trailing stop loss get me out. In this case, I would have stayed with the trade because the trailing stop loss is not hit. So if I am out of the trade at the Bollinger Band, I can re-enter right here and get out again at when it hit the upper Bollinger Band here, or the trailing stop loss would have got me out at that point right there. Then you're looking for number 3 point. This would be the number 3 point here, number 2 point, and this would be the number 1 point. If you want to look at it that way, this will probably be an intermediate swing level here. It's kind of convoluted because there's another point that occurs right there, so technically that's a minor number 3 point right here, but it makes a slightly lower number 3 point here, so that would be an intermediate level swing, which I really haven't got into talking about much. And so we get it starts moving up here again. Anytime it looks like it's sinking below the 8 exponential moving average line, you want to suspect it may be in a trend reversal there. So I want to see a breakout of the high of the previous bar before going long again, and that'll swing the 8 EME line in the right direction again. So that's what happened here. I don't know if it's reversing course at this point, but I see it's moving up again. It's breaking out of the high here. So I trade that up till I hit the next level. I can get out here at the Bollinger Band, which are often difficult to spot if it's occurring. So usually I'll get out at the reversal bar here. Another way of indicating that would be to look at the stochastic chart is pointing downward, and it looks like it's going to break out of the 80% line here. but that's another story. I'll talk more about stochastics and finding the tops. But so I can get out here, or I can let the trailing stop loss get me out. And so now I'm looking for the next swing. This might have got me into a trade right here at the minor swing. And since I'm not trading targets, I would have to been quick to see it was reversing. That's a little bit of a skill. And usually you can get a couple points if you're quick to notice it's starting to reverse on you. And that's okay. If you're using the trailing stop loss strategy, you've got to expect some of these. So I think I got out about here and maybe got a couple points before it started to reverse on me. Now, since this the intermediate trend is up, I'm not going to take any short trades. Since I'm using the trailing stop loss strategy, I simply wait for the intermediate number 3 point to form here and get back in right about here. So you can see this particular day we're not getting the crossover points, and that's true of a strongly trending market. You're not using the crossover strategy as much as you are trading the fractal patterns, the 1, 2, 3 patterns that are occurring here. This is, you get into a dead zone right here. I usually try to stay out of these. I call these congestion areas. They're long sideways areas right here. Very difficult to trade these when the 8 EMA line and the 14 simple moving average line are merged together. There's not a lot of separation. You want to avoid it becomes guesswork at this point. There's narrow sideways Bollinger Bands and narrow sideways indicators here. So the way I handle those is I trade the breakouts. So I would have gone long again here as we start as the 8 EMA line starts expanding outward from the 14 SMA line. So that's then we're using the same stop loss strategy here. Sometimes it's difficult to know when to get out at the upper Bollinger Band, or just in this case I might have stuck with the stop loss order, let the stop loss get me out. As we move up, you can see where I'm putting the I'll put the stop loss just below the low of the previous bar, and so this bar, for example, would get me out of that trade right here. And I'm using the same method all the way up. I'm really not taking the crossovers, because if you notice in a strong trend, these crossovers are often they're often fake. They'll fake you out, and you could just avoid those by always trading the intermediate trend that is happening on the intermediate chart. So we go long here at the bounce, and so it's basically the same technique, same pattern all the way up. And it's not my preferred way of trading, because I like the crossover type trades, but this is why it's important to know other strategies as well, and important to understand how the fractal patterns work. Alright, that's my commentary for today. Have a good trading day.